Hello everyone, welcome to my presentation. My name is Payam and I'm giving my presentation about the Fortescue Metal Group company, which is a mining company. In this presentation, I'm going to give some information about the background of the company, the analyzed fair value and profit drivers, risk and uncertainty, bull points, bear points, conclusion and recommendation. In total, we're going to analyze the FMG share market price, forecast short-term and long-term market demand, and providing business pitch for investors. Fortescue Metal Group, referred to as FMG, is an Australian iron ore company. Company is the fourth largest iron ore producer in the world after BHP Billiton, Rio Tinto, and Vale. Headquarters is located in Perth, WA, and products are mainly iron ore, steel, gold, and copper. In 2017, Fortescue started exploration of possible mining tenements in South America and other parts of Australia. Market cap for the company is $24.143 billion, and revenue increased to $11,975 million. Morningstar has rated Fortescue company as no moat. It means company has lower competitive advantage to rivals, who are BHP, Rio Tinto, and Vale. Net profit after tax was $4.7 billion, which was almost 50% ahead of the previous year. Higher profit for 2020 was driven primarily by iron ore price, which rose 21% to $79 per ton. Volumes were mildly positive as iron ore shipment up 6% to 177 million tons. The strong results saw Fortescue increase total dividend by 54%. Fair value was estimated at $7.70, while the fiscal 2020 result was strong and net profit increased sharply. It's hard to maintain high price in the market. It's hard to imagine external conditions getting better, and we see long-term downside in the market. On the demand side, infrastructure is pending to offset the COVID-19 downturn in China decline, and urbanization and infrastructure requirement generally reduced. The peak of urbanization has passed, and China's stock of housing and infrastructure is now relatively mature. We expect China's steel consumption to slow accordingly, for a growing portion of the steel to come from recycling. Fortescue has grown rapidly thanks to high iron ore price, aggressive management, and historically low corporate interest rate. Fortescue is China's main iron ore supplier, with particularly all of the company's iron ore were sold there. Chinese fiscal and monetary stimulus of the global fiscal crisis boosted iron ore price and underpinned strong volume growth. Fortescue could gain benefit if China supports further high level of fixed asset investment as it did in 2016. But in the long term, we see demand growth for the steel China in declining. Here we compare the financials data between 2019 and 2020, and as you can see in the slide, most of the financial terms like revenue, earning before interest and tax, and net income has increased from 2019 to 2020. And in this slide, we compare the financials data of three big companies in mining sector like Fortescue, Rio Tinto, and Anglo American. And as you see, the most important thing here is price to fair value, which is 2.13 for Fortescue and 2.87 for Rio Tinto and 1.18 for Anglo. And the most important thing that attract shareholders is the price to book value, which is 2.62 for Fortescue Metal Group. Here in this slide, we compare the financial data for Fortescue Metal, Rio Tinto, and BHP. and we can see the market cap for all of them, and price to earning ratio, which is 10.70 for Fortescue and 14.62 for Rio Tinto, and for the BHP it's 17.42. And again, price to book value, which is higher for Fortescue compared to other competitors. Risk and uncertainty is the other factor we're going to analyze here. The price of iron ore and the growth in the volumes are the major factors of fair value estimate. The main risk to cash flow is the slowdown in Chinese fixed asset investment and its consequences on price. It's even more serious factor for Fortescue cash margin, as Fortescue cash margins are low. It's even more serious factor for Fortescue as the cash margin are lower compared to rivals. In the global financial crisis, demand for steel declined rapidly, affecting iron ore price to go down. Industry pricing power will be affected if Chinese demand for steel slow and total consumption eventually shrink as we expected. Here are the bull points which attract the investor. The Fortescue management team has decided to grow. Company has become the world's fourth largest iron ore producer inside 5 years. The company provides strong leverage to the Chinese economy, and China is the Fortescue is the main supplier of iron ore to China. And also Fortescue has rapidly cut costs, so that was the wise decision from the management team. And when the cash flow goes up, instead of expanding the company, they decided to pay some debt, which is very important for the financial data of the company. And we compare the bear points. As we see, China's fixed asset investment was unsustainable, and future iron ore volume growth and prices are likely to be less favorable. Fortescue products are inferior, lower iron ore grade products compared to other rivals. So the quality of the iron ore that Fortescue produce is much lower than the competitors. And also Fortescue has relied on cheap debt and inflated Chinese economic growth to expansion in what is cyclical industry. So now we decide to what the investor is going to do. They're going to buy the shares, they're going to hold it, or they're going to sell it. Well, we can analyze this in two parts. The short term, as estimated JP Morgan analyzed, according to financial data which released by the company, there will be short-term improvement in the share price, and price is estimated to reach $13.50 by December. Also, historical data indicates that there has been a significant improvement in operation, total revenue, net income, and increase since 2019. But in the long term, as illustrated in my slide, there is a downward trend in long-term demand for iron ore. This lack of demand is mainly happening in China, which is the Fortescue main business partner. Also, high iron ore price is estimated to decline in the long term. All in all, it's concluded that it's good investment to buy and hold Fortescue shares in short-term period, whereas in long-term investment should consider to short sell the stock and make profit from declining the price in the future. Thank you so much for listening to my presentation, and this was the end of my presentation.